stock market today analysis for Thursday, January 19th, 2023. It's 7:49 p.m. Hawaiian Standard Time. My friend, I recorded about a 40-minute video before this one, thoroughly explaining a lot of stuff, and I accidentally deleted it. So here I am doing it again. I'm behind schedule. I got some other stuff to do. So unfortunately, this one's probably not going to be as good. Hopefully it is. But let's get the ball rolling nonetheless. In the description of this video, there's a link to ifsuccess.com. This is a website, and it's just happens to be my website. The mission of this website is to help you begin your trading journey. Right? Begin your trading journey. It's not the end, it's the beginning. How are you going to begin it? You're going to learn to sell cash secured put options. And this part is selfish for me in a way that allows me to grow and improve in the process. Why do I want to grow and improve in the process? Because if you want to master something, teach it. I don't want to just master selling cash secured put options. I want to master trading. But the reason why I'm focusing on helping you begin your trading journey with this is because it literally is this black and white nowadays. In 2023, it is this black and white. If you have a bank account, an internet connection, and you spend money at least once a year, if you got these three things, there is no legitimate reason why you shouldn't be selling cash secured put options on stocks that you wouldn't mind owning. Any reason that you think is legitimate is BS. BS. There is no legitimate reason. There's only BS. It's 2023. Come on. I'm alive. You're alive. I know what's going on. You know what's going on. You have a bank account. You have an internet connection. Spend money at least once a year. The only reasons that you can come up with of why you shouldn't be doing this are excuses, justifications, rationalizations, and denials. It's either one of those four or a mixture of any of those four. So that's just the truth. So stop doing that. If you're doing it, drop those things. Just learn how to do it. Go to ifsuccess.com. Download the cash secured put stock selection guide. Download 3 stocks I sell cash secured put options on. They're not recommendations. They're probably not suitable for you. You're going to learn how to pick stocks that are suitable for you. Maybe they are. These ones are. Maybe they're not. But don't just blindly accept them. You figure out what's suitable for you. And how do you figure out what's suitable for you? Is you follow this formula. You download these 2 things. You can download these 2 if you want also, but these ones are definitely geared towards selling cash secured put options. In the same description of the same video below, there is a playlist. This is Trading Options for Beginners, with beginners in all caps. You're going to watch that. There's 5 videos in it. It's going to show you how to set up your stock charts. It's going to tell you all the definitions you need to know. It's going to give you a basic theoretical understanding of how to sell cash secured put options. It's going to go further and show you how to sell covered call options. It's called the wheel strategy. Show you how to do the wheel strategy. And on the 5th video, it's going to show you how to use the Yahoo Finance screener tool for free to screen for stocks, good fundamentally sound stocks, and with the information you find out in here, in combination with the Yahoo Finance screener tool, you're going to be in a situation to start paper trading and testing it out before you risk real money. If that wasn't enough for you, at 4 minutes and 30 seconds, which is coming up in 20 seconds, I'm going to link to a video that you can go back and watch it later, because you're going to remember it's at 4 minutes and 30 seconds. That video is going to give you 5, not 1, not 2, not 3, not 4, but 5 reasons why. Here it comes. Get ready. It's going to pop up right there. Boom. 4 minutes, 30 seconds. Keep that number in mind. 4 minutes, 30 seconds. Grab a piece of paper, write it down if you need to. 4 minutes, 30 seconds. Get your carrier pigeon, send it over to your mom and dad if you need to. 4 minutes, 30 seconds. You watch that video. It tells you 5 reasons why you should be selling cash secured put options. When you know why, the how becomes a lot easier. So figure out the why first. Let's move in. The futures. Now the futures It's not called the futures because it's showing you the future of the stock market. It's called the future for some other reason. Not going to go into that because I'm on a time crunch. I got to get this done. But what you can do. Now, I live in Hawaiian Standard Time, for better or for worse. When it comes to trading, it's for worse. You know why? Because if you live in the Eastern Standard Time, whoo, doggies, you are lucky. And I envy. My life has a lot of people that are like, oh man, I want to live in Hawaii. I'm thinking, I want to live in Eastern Standard Time. You know why? Because if I wake up around 6, the futures are already open. Gives me an idea of what's going to happen in the stock market. I can look at these 4. Look at the S&P 500 futures, Dow Jones futures, NASDAQ futures, Russell 2000 futures. Give me an idea of what's going to happen in the stock market. And it's been trading, all night when I was sleeping. And then if I wake up around 6, 6:30, stock market's not going to open till like whatever, 9, 9:30. I've got a couple hours to watch the futures and have an idea of what's going to happen in the stock market. Now, when the stock market closes, 4:30 Eastern Standard Time, futures are still trading. If I don't go to bed until 10, I can watch the futures from the time the stock market closes until I go to sleep. Repeat, rinse and repeat. Do it over and over. Now over here in Hawaiian Standard Time, I wake up, stock market's already open. The only time I got to peek at the futures to give me an indication when the stock market's not open is from 11 or 10, depending on daylight savings time, until I go to sleep, which is about 10. So that's what you can do with the futures. And what do we see? We had to sell off on this candle. The most recent candles, right? Sell off. Now I had told you that I'm remaking this video. When I made this video the first time, this candle was green, this was red, this was red, this was red. So in this amount of time, it's turned green. However, stock market's not going to open until I think 4:30 a.m. Hawaiian Standard Time. So we got several hours for these candles to be going. So that's what it's one thing that you can do. Unless you want to trade the futures, which I trade them. I like trading them. But it's a different animal. It's a more advanced animal. It is definitely an instrument that's more advanced. So if you're not going to do that, you can at least kind of keep your eye on them and watch them to give you an indication of what's going to happen in the stock market. 10-year treasury came down, hit this 200-day moving average. You see this big sell-off right here. Where is it right now? It's in the bottom, at least 25% of the body of this. Unless it gets back up to the top of here, right? It's down here. How many days? The more days it takes to get back up to the top, it's kind of showing us the weaker or maybe the stronger the downtrend is. Oil's kind of stuck around this $80 mark. It seems to be kind of wavering between about 75. Oh, you think, yeah, it's 72 right there. Yeah, sure, whatever. 72, 75, right in that range. A lot of this stuff you got to get more used to range than an exact dollar amount. So somewhere around 75 to somewhere around 80. We got up to 82. Natural gas. Look at that smooth progression down. Now, check this out. Natural gas is at high in the last 30 days of trading. Almost $6. Low, just hitting it this candle tonight, $3.12. And this, if you try to trade this, there's a good chance you're going to lose money. And Eric Townsend from the Macro Voices podcast has repeatedly said that natural gas is called the widowmaker. So don't, unless you want to go death wish Charles Bronson. And if you're not old enough to know what that is, it's just straight up death wish. You want to go out Charles Bronson style, maybe start trading the widowmaker. But if you don't want to do that, one thing that you can watch this for is how much lower can you go before you hit 0? It's already at 3, right? Now, oil last 2 years ago went negative 40, but that's very, very rare. That probably doesn't even happen happens less than once in a lifetime, because I think my grandmother was born and died, and in her lifetime, oil never went into a negative number. So, it's like, it doesn't even necessarily happen once a lifetime. Maybe it happens, I don't know, maybe there was hundreds of people that lived, thousands of people that lived before it happened. So it might be once every 1,552 lifetimes. I don't know what it is, but doesn't happen that often. So the point is, it's probably not going to hit. It's probably not going to go below zero. So you can watch this and realize, like, what if I ever want to trade a stock that's around $5? What is it going to look like? Or even if this is $40, and what does the pattern start looking like as it starts reaching a bottom? Because it's probably not going to go past zero. Could, but it's probably not. It's at 3. So sooner or later, it's natural gas. Like, how low can it really go? So you can watch that and just kind of train yourself on some price action. Gold. We see gold is still in this uptrend. Sometimes I talk about how when you have a big candle to the upside or the downside, you can look to see how long does it take for prices to get back up to the opposite end. So for example, here we have this big what do you call that, bull candle here. We got this big bull candle. In 2 days, prices are almost by the end. At least prices hit down here in 2 days. I know it closed right there, but price action moved all the way down here. Third day, boom, over the top of this. What does that tell me? It didn't just kind of linger up. In 3 days, it went up with some power. 2 days of selling off, and boom, another big candle. So what if 2 days from now it's back down here? Then what's going to happen on the third day, right? It's giving you an idea of, in this case, it's an upward trend. It's giving you an idea of the power of the upward trend. Here you got a bull candle. The very next day, prices open, right, close here, open exactly where it closed, sells off below. The day after that, opens a little lower than where it closed, and boom, prices are on top of there. That's telling us like this red candle was basically completely ignored. Went sideways for a couple days, right? Up, got this big candle. We talked about that sell off. Boom, right up to the top of there. Volume. Look at the volume's really, it's been over the average volume. So you can keep that in mind when you see things. I forget what it is. I think when we look at the indices, when we look at these, right, we're looking in the opposite direction. It's falling down. How far is it going to take to get back up? Silver has basically been going sideways, right? But this big candle right here. Now tomorrow that big candle is going to disappear, but we still see it for now. And price action at the moment is in the upper 50% of this. Got down here, but didn't really get to the all the way down here. So prices going sideways. We have to look at, instead of looking at 1 month for 1 day, maybe we should look at like 6 months, a year, and get an idea of a longer type of trend. But we see our 200-day moving average kind of sloping down. So there's a chance over the last 200 days, we probably see price action moving down. But now we're above that 200-day moving average. So what's the point of that? It's like, hey, you're going to look at only 1 month of data. Don't make financial decisions. Excuse me. Don't make financial decisions over 1 month of data. You really need some more. Bitcoin. Now, I hope you live in a state that gives you enough freedom to trade Bitcoin. Unfortunately, the U.S. is not the land of the free anymore, because I am a United States citizen and I live in a United state, but they don't give me the freedom to trade Bitcoin. So I'm sorry to break the bubble, sorry to burst the bubble to you, but this is no longer land of the free. If your good buddy Brent is not legally allowed to trade Bitcoin, when it obviously cannot hurt anyone, and at the most that would happen would be, maybe I would lose my money, just like if I went to Vegas, right? But state of Hawaii doesn't constitute me as a free enough human being to do that. So I just watch it and kind of learn what's going on. So if you live in the unfree state of Hawaii also with me, then unfortunately you're not going to be able to easily trade it. If you have Tastyworks, you're still not going to be trading it, even though they'll let you trade it. This is the futures here, so you can trade the futures, but you can't trade Bitcoin. So anyways, we see that it went up. We want to see what's going to happen, right? It's still under this downward sloping 200-day moving average. If we looked at a 2-year chart, we see it's in a massive bear trend. So just because in 1 month it looks like boom, it's in the new bull trend, it's going to the moon now. Hold on, Turbo. You might want to cool those jets, because it's got to get over and stay over that 200-day moving average in order to really resume some sort of bull trend. And since it gapped up here, that's cool. It might go sideways. Maybe it's going to build some support. But what it had a tendency to do over the last year or so, 2 years, is it kind of goes sideways, it goes up, and then eventually it crashes back down. So we'll see what happens. Look at it. There's a weak volume. So if it's going to the moon, you know how much energy it takes to send a rocket to the moon? And these are paper assets. They're not even rockets. You can't even, can you imagine you crumple up this piece of paper and you can't even throw it as far as you throw a baseball. So how is it supposed to get up to the moon? It's going to need a whole lot of energy to have a piece of paper. And technically, Bitcoin's not even a piece of paper. It's a computer blip. How is it going to get out of the atmosphere as a computer blip? I don't know. It's going to need a lot of energy. So you got to have some more volume than this. And let's look at here we go. Now we already looked at Bitcoin. We talked that you found out your good buddy Brent is not a free man. They won't. They have me shackled. They have me in chains, shackled here, not allowing me to financially make decisions with my money. I just gotta. I live in slave landia over here in Hawaii, and we got crude oil. We already talked about that one. We already talked about gold. The dollar. The dollar. It's been in a downtrend. We see it kind of went sideways here, but before I was taking out this drawing pen and I was making this nice little downward channel with it. But I mean, we can, if we get funky, funky chicken style, we can, hey, look at it, still in this downward trend like that. Yeah, that's a downward trend. No, I'm sorry, my friends, that's not how it works. It's not. It's still going down, but it's not in that nice, clean downward trend. Kind of like we had this sideways here, kind of boop, bumped up a little bit here, dropped down here, kind of went sideways here. So yeah, it's been going. It's not got some smooth trend lines here. Let's just let's do one of these. You like that? How about that? So the dollar has been moving down, and the dollar, treasuries, gold, oil to some degree, maybe Bitcoin, silver. Those are really high. It might not seem like it, but those have a lot of political influence on them for various reasons. So just keep that in mind, right? That sometimes the price action can be politically influenced on this. 100% on this. I mean, gosh, golly gee, this asset is coming, this fiat asset is coming from the government themselves. And if you say, hey, Brett, no, it doesn't. It comes from the Federal Reserve, and that's not part of the government. Well, maybe in your definition, but in my definition, it is definitely the government. So those 10-year treasuries, now that's, you can't draw a straight line. I didn't do very well in drawing class, but we see been going up, had been going down, started going up, and for a while, I don't know if it was a couple of years or a couple months, or even like 24 months, kind of 2 years, whatever. It's kind of like TLT, whatever TLT was doing, the stock market was following, but that seemed to be really breaking off. Seemed to be really breaking off. Not sure if it's still following that anymore, but just kind of keep your eye on that to give you an indication. VIX, fear index, volatility index, the fear meter. All right, fear seemed to be going up. See this big candle? We talked about these big candles. How long is it taking to get back up there? Well, closed over here, but it took 1, 2, 3, 4 days to get into the trading range to back up here. But it closed down here. All right, so where is it closing at? It's in the, seems like maybe the 50% mark is here. It's kind of maybe just barely in the top 50%. So we'll see how tomorrow goes. Now, overall, we're basically seeing the whole stock market by looking at these 4 indices. If you just want to look at one, look at the SPX, whatever, SPY, S&P 500. That'll be a good proxy for the overall stock market. But when you have all 4, the SPX, Dow Jones, NASDAQ, Russell 2000, you're really pretty much seeing the whole stock market, or very close to it. And we see that it's just been selling off. Now, some people, they need the stock market to go up to make money. Now, you're not going to be that type of person. I have a feeling you're not going to be that type of person. You're going to be the type of person that understands, let's change the color. You're going to be the type of person that realizes stocks can go up, they can go down, they can go sideways. So you and I are birds of a feather. Now that we know this, we ask, is there a way that we can make money in all directions? And the answer, without a doubt, is yes. And I just have a feeling that that's what you're going to do. I have a feeling that you don't want to be a one-hit wonder. I have a feeling that you don't want to limit your finances to 1/3. I have a feeling you want 100%. And so, unfortunately though, not everybody is like you and I. There's a lot of people out there that they only can make money if the stock market goes up. I feel bad for my fellow human beings. That's why I'm trying to get this message out there. So, since some people are going to need the stock market to go up, what we have here is a gap, right? I don't know if I'm missing my cursor here. We got a gap from this big bear candle, this big bear candle, this big bear candle, this big bear candle. It gapped down today. So if you want to know if the stock market is going to go up, then you should ask, how strong is that movement up, right? So we see it's been going up here, it's been going up here, it's been going up here, it's been going up here. Right here for the Dow Jones, this tells us how strong that movement is to the upside. Not too strong, right? Because look, how many days did it take to get up here? 1, 2, 3, 4, 5, 6. It took 6 days to get from down here to up here. It took 3 days to come right back down. Right? So in this particular indice, 6 days to get up, 3 days to come down. Right? What they do say, you know, the bull goes up the stairs and the bear goes out the window. But that's also showing us that that's not super strong. It's back down here in this trading range, right? You see those how it's kind of going in that channel. It's back in that channel. All this bull movement to the upside wiped out in 3 days. Not so much. It's still got time. It's still got a ways to go to get back down here. Same with this this channel. You see it's the sideways range, but here's it's telling us that our idea of a strong bull trend is being compromised in the last 3 trading days, these last 3 candles. So the first thing that we want to look at is, how many days does it take to fill this gap? If it never fills that gap, then like, you know, 4 or 5 days will go by and that gap is still not filled. If tomorrow that gap gets filled, if tomorrow we're trading, you know, in the bottom 50% of these big bear candles, that's different than if we're not, right? If tomorrow we don't even fill that gap, and it's telling us that there's every day that this gap doesn't get filled, the longer it takes to fill that gap, it's telling us like this idea of strength to the upside, it's fading with the day. And so then let's say it does fill the gap. Then we want to see how quickly do prices get back up to the top. Just like we saw how quickly prices came back down, right? It showed us the trend, this upward trend here is not that strong because 3 days later, boom, it reached this point, right? It pivoted here and then it came down hard all the way back down here. Same thing with this basically. How many days? We're right here. So how many days did it take? Here was the high, so we'll count that one. 1, 2, 3, 4, 5. 4 or 5 days, however you want to count that. Right? It took 4 or 5 days to get up there. It took 2 days to come right back down. You see what I'm saying? Is that making some sense here? It took 2 days to come down. Right? It took 1, 2, because right here, it's down here. This was it can't be this one. It was this one. This is where prices were. 1, 2, 3, 4. Right? 4 days. Boom. 2 days. What it took to from here took 4 days to get up here. 2 days. Wipe that out. Same thing about 4 days. I guess it hit a high right here, but you know, whether it's 4 days, whether it's 5 days, kind of in there, it's still this range type of thing. Right? None of this stuff. And this is one thing that I would like to pass on to you. When these people go on TV and they're talking like they can prove something in the court of law about the stock market, I think you really need to keep that in mind. That none of this stuff These people are talking with so much confidence. Like, you ever watch MMA? Remember how Conor McGregor was talking about his fist is bigger than Floyd Mayweather's head and how he's going to knock him out? He didn't. He lost. All right. So no matter how confidently the guy was up there flapping his lips, the fact is he basically lied. He didn't do what he said he was going to do. So don't be fooled by these stock market people that go on TV and they talk confidently. Just because someone talks confidently doesn't mean they know what they're talking about, or it doesn't mean they're right. So don't be fooled by confidence. What you want to do is you want to be able to look at information, and you want to be able to make the highest probability decision. And you want to manage the risk of that decision. Don't think of a black and white situation. Think of multiple shades. You're trying to get to the close. You want to get as close as possible to knowing if it's black or white, but you want to realize that I'll never know for certain. So what am I going to do to manage the risk? How am I going to manage things if I'm wrong? That's the best way to play this game. Don't try to play this game with like, I know 100% certain. It's a guarantee to happen. That's a way that you're guaranteed to transfer your money to somebody else. So we see right now the stock market's basically, dropped down. We can take a look at the different sectors that make up the stock market. We looked at those 4 indices. That's basically looking at the whole stock market. And even though those different indices, not every one of these sectors is in every one of those indices. Like the S&P 500, every one of these sectors is in the S&P 500. But not every one of these sectors is in the NASDAQ. Like the consumer staples, that's not in the NASDAQ. NASDAQ is like tech stuff, right? So, but overall, between the Russell 2000, the Dow Jones, and NASDAQ, and the S&P 500, it's like all made up of these sectors. So we see, let's do it because I'm running late here, being that I accidentally deleted my first video. Let's go through here on the quick and dirty, and let's count up moving 200-day moving average. Is it downward sloping? Is it sideways? Is it going up? And where's the price action? All right, so technology, very important to moving the Russell, the S&P 500. And overall, it could be said that for the last couple of years, the technology sector has basically kind of been supporting up or making it look like the stock market's stronger than it is. And this one is below a downward sloping 200-day moving average. So that is overall to the overall stock market, it's putting a weight to the downside. Healthcare. Healthcare is it's also a pretty important sector to the S&P 500 for the overall stock market. Not 100% sure about that, but we're going to call this a sideways moving average, right? And it's debatably down, but it's also debatably sideways. And we got price action kind of like 50% on top. We got price action kind of 50% on the bottom. So we're just going to call that one sideways. This one, we're definitely our price action is on top of a downward sloping 200-day moving average. This one, XLF, financials, it is very important to the overall stock market to have the financial sector moving up in order to get the stock market to move up. But being that that we got this downward sloping 200-day moving average, I know from here to here we're up from here to here. Big trend, we've been going down. We're only looking at 1 month of data. If we looked at 6 months of data, let's just do that super duper quick. Let's do that. Let's look at and how can let's see if I can do it. Maybe I can do it like this. We got to get rid of that. 3 charts. XLF. There we go. All right, so now we're looking at whoopsie, 1 year. This is a weekly chart. 1 year. What do we see? Boom, down, right? Right. Here's a high. Here's a low. What's been going on? You see that over the last year? That's why the 200-day moving average is sloping down, right? Prices were here. around this high. Where are they at now? So sloping down. And I didn't really need to do that for myself, right? Kind of doing it to show you, like, that's for me. I can have these set up like this, and I know for one of, you know what, I was on the weekly, wasn't I? Oh, bonkers. Look at that. On the weekly. Okay, let's just continue with the weekly. Whatever. It's just, this is going to give us a better idea of overall direction of the stock market anyways. And no wonder. I was thinking, like, man, that's really steep. I don't remember seeing that. No wonder. I'm on the weekly chart. Okay. So yeah, let's continue with the weekly. Let's change it up because I don't really want to redo this whole video. So okay, this one, all right, our price action moving down. All right, this one we're going sideways. Right, this one, even though it's above that 200-day moving average, right? It's, look at how steep slopely. We look at that. Overall, this is all right. You know, okay, I'll give you the benefit of the doubt. We'll go sideways, right? But we're definitely not going to count that as up. Over here, down to sideways. You know, we got a certain amount below. Yeah, we're gonna go sideways. This kind of run into the same thing. Like, here's our price action right there, but at the same time, look at that long-term trend. It's been going down, prices kind of up. And what is this doing to the stock market though? I don't know. I think we'll just call it sideways for the moment. This one, we definitely, that's probably don't take too much analyzing that. We see that's down. How about this? Starting to sideways out, right? Look at that. Look at this little bottom right there. Quicker pivot right there. Oops. I want to get rid of all my, I don't want to get rid of all my beautiful artwork on that so quickly. Look at that. Look at that. Huh? Now, right? See this part of the W? So it's forming this W here. But look at this left-hand part of the W is lower than this part. That's a positive sign. Even though it's fighting up, it's fighting against this, right? 200-day moving average. Now, if this price action can break this, right? That's the first thing. You got to break this. Next part, it's got to break either here or here, somewhere in there. It's got to break over that. So at the moment, we're going to count this one is up. This down. But even though it's doing the same thing, right? You see it, right? You see it? Look at that. Man, look at that. Isn't that beautiful? Look at how much, look at where that is. Look at how much higher that is there. Same thing. It's got to get past this, right? If it doesn't get past this, then it's just going to kind of peter out like that. Going to turn into an M instead of a W. M is going to be down to the downside. How about this right here? We see that 200-day moving average kind of going sideways, and we'll say it's sideways there. Same thing with consumer staples. I'm going to count that as sideways. And consumer discretionary, that's 100%. No arguing that. And energy, see going up. All right, so let's count the ups because there's so few and far between. And I kind of think I'm giving it the benefit of the doubt. So going up, we'll put in blue. We got 1, 2. Going down, we'll put in red. We got 1, 2, 3, 4. And going sideways, we're going to go with yellow. 1, 2, 3, 4, 5, 6. How many is there? There's 12. 50% of them going sideways, right? We got 6 going sideways. We got 2 sectors going up, and we got 4 sectors going down. And that really, right, 6 sideways, 2 down, 4. I've been saying, and I want to be really clear on this, right? I just got done talking about, like, don't necessarily believe these people that just because they say something with confidence. The reason why I keep saying sideways to down is because that's, to me, what I'm reading out of these charts, sideways to down. Not because I want it to go sideways to down. I don't care what direction it goes. If it goes up, it's actually easier for me to make money if it goes up. My mom is in a better situation if it goes up. So my mom is someone that can only make money in one direction. So it doesn't make me happy to see it go down. I don't prefer. It's not about what my preference is. This is not about do I like you know, what type of cheese do I like on my sandwich. It's not about that. It's about what am I seeing happening and how can I make money from it. Not about what I want. It's not about what I prefer. It's about what's happening and how can I profit from it. And so what I see happening is I see a lot of sideways action. For example, this is where we are right here today. Now I know this is not the best line, but when I draw this, look at how many times prices kind of got around here. So we see it right in here, right? It's a little bit above and below here. Prices get stuck in here. You see it right in there. Prices got stuck in there. Right there. It almost touched it right there, right? That and that, you know, maybe I dropped it down a little bit. That might be almost the exact same thing. Prices get stuck right in here. And then it's a little wider too, right? Look at it right up there. Look at right up there, right? You see it right there. You see it right there. It's a little bit lower too, right here, right here. Did it happen over here? Look at that. Almost right there to it again. This one's a little bit lower, right? A little bit higher up here. You don't really see it there. It's more on the lower side down here. You coming over here, boom, right there, a little bit lower. So it's like something is going on in this kind of like in this area right here. There's definitely support and resistance right through here, and it's somewhere also right up through here, right? And it seems like it's also somewhere right through there. Now it might be more of a range. I don't know exactly where that range is, but it's the same thing. So we had 6 out of 12 sectors that really appear to be sideways pressure, which would make sense because we're seeing a bunch of sideways stuff here, right? We had, was it 4 out of 12 sectors down, and we had 2 out of 12 sectors up. What does this tell me? It tells me that selling call options is probably pretty good. I'm a net option seller. Selling call options, the risk does not seem to be to the upside. If the powers that be, the government, the treasury, the Federal Reserve, whatever, I lump it all up into the government. If they start doing some sort of program that creates this, then I'm going to stop. Then the risk is to the upside, right? But right now, the risk is more to the downside, and I guess the risk isn't to the sideways, but you know, if I'm selling cash secured put options, or if I'm selling naked put options, then my risk is to the downside. When I'm selling call options, my risk is to the upside. So the safest place to me seems to be profiting, well, at least as a net option seller, the safest place seems to be with calls. It seems like the least probability is going up. It seems like the highest probability is going sideways. So what could you sell going sideways? You could sell iron condors. You could sell call spreads. You could sell put spreads. when you combine selling call spreads and put spreads, you're selling an iron condor. You could sell strangles. Strangles are it's not a spread, but you're selling a call and you're selling a put, right? And it turns into an iron condor if you turn it into a spread. But you got to be able to, judge that distance. That's a bit more of advanced trading. So what if you don't want to get too much into advance? What if you just want to stick with selling selling cash secured put options on stocks you wouldn't mind owning? Then, right, then what I'm doing is I am not as much focused on the premium I get for the contract. I'm focused on what price do I want to buy it at. And if I make less money, if I'm making less money on the premium, I'm okay. I'm going to hedge the risk to the downside by making sure if I have to buy the stock, I'm buying it at a price that I want. And so another thing I'll do is I'll put an order in. I'll put a limit order in to sell the cash secured put option at a price that I want, and I'll just wait. I put it good till cancel, and I'll wait till that stock drops or volatility increases, right? And I'm getting filled at that strike price that I want, even if I'm not making as much money. So I'm selling a little bit further away from the money, or I'm also being a lot more selective on the stocks that I want to sell the cash secured put options on. I want to make sure I'm getting stocks that can weather any type of financial storm. So I'm getting stocks with earnings. I'm getting not just earnings that are profitable after earnings, right? Just like you, if you make $1,000 a month, you make $1,000 a month, but let's say you spend $5,000 a month. Are you profitable? No, you're not. Every month you're losing $4,000. Companies the same way. They've got money coming in and they've got money going out. So I'm looking to see, do they have more money coming in, right? Because what if this is, let's just throw an extra zero in there, right? Then it's not losing money, then it's making 5K. I'm making sure they're making money. I'm doing more than that though. There's a little more to it, but that's just kind of keeping it basic, right? So I'm making sure that these are companies that are profitable. They're not these, well, in the future, they're going to make money. No, I don't want in the future. I want in the past, it's been profitable. It's still profitable now. And so that's what I'm doing, selling those call options. And, the stocks that I already own, I'm selling call options on those. Sometimes I'm selling naked call options and collecting dividends. I'm reinvesting most of the dividends into buying more shares of the stocks. And that's kind of it. That's the quick and dirty of what your good buddy Brent has been doing. And I think it works pretty darn well for me. It's probably going to work pretty darn well for you. The last thing I want to leave you with, we haven't looked at these interest rates for a while, but it's worth noting. Now, generally speaking, in the I live in the U.S., so I really only familiar with U.S. media. But U.S. media kind of, no matter what's going on, there could be a nuclear bomb going off, but the U.S. media is going to tell you how that's great for the stock market. That's just I mean, I know I'm over exaggerating, but that's just how they kind of tend to do it. They kind of, paint a rosy picture, like no matter what's going on. And if you can justify, you can deny, you can rationalize, you can defend, go for it. I don't care. Your unwillingness to accept reality does not impinge on my viewpoints and my ability to make money. It impinges on yours, not mine. So, sorry, I went off on a tangent there and I lost my train of thought. So here's what I want to get at is that for maybe close to 24 months now, we've had this inversion of the yield curve. You might have heard about it. Now here's a 10-year treasury, right? 10-year treasury, I guess, closing at 3.37%. Basically, in a nutshell, you could say you lend the government money for 10 years, they're giving you 3.37% in your money, right? Not too bad. Now, here's 2-year treasury yield, right? You lend the government for less time, 8 years less, they're going to pay you 4.06%. Now, think about this. Where's your risk at? If you lend me money for 2 years, is that riskier than if you lend your good buddy Brent money for 10 years? If you don't know, let me just tell you the answer. This is riskier The longer it takes for you to get your money back, the riskier it is. So why is it that the government right now has to pay people more money for the shorter duration? Why does the government have to pay people less money? Excuse me, pay people more money to borrow money for less time? There's less risk here, but they're paying people as if there was more risk. Now, we don't necessarily need to know the answer. What I want to, when they say inversion in the yield curve, usually what happens is 2 years, right? You get, it kind of goes like this. Your 2 year, you get paid around this much interest. But then when it comes to your 10 year, you start getting paid more interest. That's how the curve should be, right? The yield curve, yield from here to here. It should go up as you go out in time. But what's going on right now with these shorter term rates having a higher interest than these, it's going like this. It's inverted. It's flipped over, right? Your higher rates for less time, higher rates for less risk. So generally, I guess what happens is about, I don't know, 18 to 24 months later, after this yield curve inverts, there tends to be a recession. Now we're in an interesting recession time here because the government has changed the definition of recession. So if you want, you can go with the old Webster's dictionary definition, or you can go with the government's new definition. I don't really care which one you go with. Your good buddy Brent is going to make money. So I suggest, instead of going with politicians' definitions of things that they're going to change to suit their best interest, I suggest you go with what makes you money. But hey, if you don't want to make money, if you just want to have accurate definitions to the current regime, hey, you do you. And so what does this tell me? This tells me that I don't think we're out of the recession. I don't think we're out of the economic turmoil woods, right? So going back to this, right? Sideways to down. Sideways to down. Well, if there's all this yield curve inversion, Brent, why is it not down to sideways? If you don't know this one, plunge protection team, created in 1988 to provide financial and economic recommendations to the U.S. president during turbulent market times. This group is headed by the Secretary of the Treasury, Janet Yellen at the moment, members of the Chair of the Board of Governors of the Federal Reserve, Jerome Powell, Neil Kashkari, what was it? Menster. What else are those ladies? I forgot some of their names, but those people. So what are they doing? Unless they want to pull the rug out, they're helping to keep this up. Plunge protection, right? Plunge means going down, protecting from it going down. So you've got economic forces pushing it down. You've got political forces pushing it up. I think that's our most likely scenario. I thought that's what our most likely scenario is, and that's why we're seeing 6 out of 12. In my opinion, that's why we're seeing 6 out of 12 sectors going sideways. Now, I will, as soon as I start seeing something different on the charts, then I'm changing. All this, boop, all this gets erased. This starts going like this, then that's what I'm saying. That's what I'm going to see, and that's what's going to happen, right? I don't really care which way it goes, right? My mom, she can only make money one way. But you and I, we're going to make money if it goes up. We're going to make money if it goes down. We're going to make money if it goes sideways. So I don't care which direction it goes. I just want to have an idea of which direction it goes so I can implement the proper strategy. Or if I'm going to do the same strategy, selling cash secured put options, because if it starts going up, I'll sell cash secured put options closer to the money. You know why? Because if I sell a cash secured put option here and the direction of the market is overall going up, and it happens, I'll get more premium by selling up here, and maybe I don't want to own the stock at this particular price, but it drops down here, I get assigned, and then maybe I sell a cover call option right here. Boom. And then I make this capital gains on here. I made money from the premium here. I made money from the premium here. And then I just start doing the wheel of fortune strategy. Selling cash secured put options until I get assignment, selling covered call options until I get assignment, and then just repeat the process. So depending on which way it goes, I can modify strategies I'm going to use all year round. And then depending on which way it goes, like if it starts going up, I'm not going to be selling as many naked call options. I'll sell more naked put options, right? I'm just going to, when I'm selling options, I'm going to sell opposite of the direction it's going. If it's going sideways, it lets us kind of sell on both sides. With that, my friends, I hope that was helpful. I'm doing my best to make these more concise and give you some actionable type of information. But the main stuff all boils down to this. You know, I do a lot of training in my position in this company at the moment, training people how to do a specific activity. I do the activity and training people. But and it's similar to this. Like I'm trying to help you see how to do something, right? But the most important thing, whether it's this or like for my personality, the most important thing I can help train somebody in is not to blindly follow rules. It's to think for yourself so you can make wise decisions. I might even spell decisions wrong. I apologize if I do. Think for yourself. All this information is here for you. You just have to have an idea of how to process the information. That's really it. How to process the information and realize it's never if you ever think you're 100% sure of something, you need to relook at this. You need to relook at your thought process. When it comes to the stock market, I don't think you should ever feel like you're 100% sure, because there's no the people that I learn from and I know are the most honest mentors that I have. They will say that I don't know for sure what's going to happen. It's the people that go on TV or they need something else. The people that want to make money, I think they actually will acknowledge that they don't know for sure. Because when you want to actually make money from the stock market, you want to realize where you're uncertain and protect. It's not about it's not about admitting that you're not good in the stock market when you're talking about how you're not certain about something. It's very wise and it's very smart to admit where you don't know where something might happen so you can protect and hedge, because the stock market is full of ways to hedge. So I hope you do it. With that, you guys have a fantastic day, and I'll talk to you later. Aloha.